Greetings, everyone. This is Richard Crevo with our chart drill down for October 14th. The video last week that I did was entitled Interpreting Mixed Signals. And just to elaborate on that a little bit, at times some, many, or all of the pairs can be in a state of transition. And it is at those times that I personally prefer to sit on the sidelines until the direction that they choose to trend is a bit more clear. And tonight there is, in my opinion again, a bit more clarity. That being said, many of the pairs are beginning to trend on the daily chart, but are not yet in sync with the weekly chart. For example, on the daily chart, they might be building higher highs and higher lows, or lower highs and lower lows. But on the weekly chart, the opposite is still happening, but the build out is much more significant than what we saw going on last week on the daily chart. Now, when the daily and the weekly sync up, the probabilities of having a successful trade are increased. Now, if I choose to enter the trades in the above scenario, meaning the pair is building out on the daily chart, higher highs, higher lows, etc., I'll likely trade smaller, in other words, fewer lots. Now, if that second scenario plays out, the daily chart and the weekly chart are in sync, I can choose to trade larger positions, always keeping in mind never to put more than 5% of my trading account at risk. Now, regarding the way my charts are set up, if you have any questions about any of the indicators I use or why my charts are set up the way they are, refer to the YouTube of May the 11th, and it's entitled Chart Tutorial for an explanation. If you still have any questions, you can feel free to email me at rcrevofx@gmail.com. Now remember, the chart drill downs that I do are designed to identify higher probability trading pairs, probability emphasized. Any of these setups by no means should be taken as an indication that they will ultimately turn into a winning trade. Trading, as I always say, is about probabilities and identifying a trading edge to provide us with a higher probability trading opportunity. And the more of those we identify, the greater the likelihood that we're going to be profitable at the end of a week, a month, a quarter, a year, something along those lines. Okay, let's take a quick look here at our disclaimers. Essentially, trading FX involves significant levels of risk. You should only be trading with risk capital, and that's money that you can afford to lose, money that you are, don't trade with money that you are not in a position to lose, because losses do happen, and they will happen to even the best of traders. High degree of leverage can work for you as well as against you, and the content provided herein is for informational and educational purposes only, not intended as specific trading recommendations. Okay, let's get ready to look at some of the charts here. Hang on one second. As you may recall, I use a strong weak currency analysis to point me in the direction of the pairs that are in stronger trends. Should you want to know more about that, feel free to email me at rcrevofx@gmail.com. Now, the most recent strong week analysis that I did, which was about maybe 30 minutes ago, indicated that the New Zealand dollar was the strongest currency that's out there, and the US dollar was the weakest. So that's my first stop as I drill down these charts. So now I'm going to go and look at the New Zealand USD, and there it is. And see what I mean here. Again, here's the daily chart, daily, weekly, 1 hour, 4 hour, the way I have them set up. And the daily chart took out the lower Donchian channel, touched it here, touched it again there, and then for the first time in quite some time is building out to the upside. You can see it hasn't touched the upper Donchian channel since back in April. So it's been a while. And now it's building out higher highs, higher lows, taking out the upper Donchian channel consistently. That being said, remember what I said, it's not in sync with the weekly chart. The weekly chart is building out to the upside, but the upper Donchian channel has not been touched yet. So if you're trading Donchian channel strategy, we have an uptrend on the daily, an open buy signal, and we have still in place an open sell signal on the weekly chart. That being said, on the weekly, we've got nice angle and separation right here on slow stochastics. Good angle and separation, K line moving above the D line. And we've got the 1 hour chart. The Donchian channel continues to be taken out to the upside. the ideal point to enter this trade off the 1 hour chart would have been way back here. But what I'm waiting for now is another one of these to happen. I'd like to see price action pull back and to the lower Donchian channel, touch it, and then move and take out the upper Donchian channel. So here for Donchian channel strategy, we've got touches the lower channel, touches the lower channel, then takes out the upper, while the daily chart here is in an uptrend. So we've got a situation where the entry might have been earlier today on October 14th, but around roughly 2 a.m. in the morning Central Time. But that's what I mean. The strong weak analysis points me in the direction of the pairs that are trending the most. And this one is, we can see higher highs, higher lows on the 4 hour, higher highs, higher lows on the 1 hour, higher highs, higher lows building out, not quite yet in sync here. So at this point, to my thought, this is not ready. I want to see a stronger pullback here rather than just, you know, the little ones that we have right here. Entering there as after the pair pulled back and then took out the upper would have been a profitable trade for a period of time, but I like to wait for the pullback and then with the uptrend reestablished, if you will, on a 1 hour or on a 4 hour chart. Let me show you the difference between this chart and let's say the Aussie dollar is quite a bit in play this evening as well. So let's take a look at another chart. Let's take a look at the Aussie yen, and I'll show you a little bit something that's different. Okay, here we've got Aussie yen, again, touched, yeah, just about touched the lower channel there. Not quite, but I mean, that's close enough for me. And then it's taken out the upper channel. So it's in an open buy scenario with the Aussie dollar being strong and the Japanese yen being weak. Hang on one second here. Yeah, we got the New Zealand dollar being strong, the Japanese yen being weak, but it still is in an open sell scenario on the weekly chart, open buy scenario on the daily chart. So they're not quite lined up, and maybe they won't get lined up. Don't know. But right now it's building out to the upside. What I like about this chart a little bit more is uptrend on the daily. And we see on the 1 hour chart, you see how it's pulled back, taken out several times, the lower Donchian channel. Now it's oscillating on either side of the 200 period moving average. So official Donchian strategy would dictate that I would place a price alarm maybe around, let's say that upper channel line, which is about 88.60, set a price alarm when and if it gets up to that level. That's about 200 pips away, so it's a ways off. And then take a look and see when price is taken out, if it's taken out at 88.60, is the Aussie dollar still strong across the board? Is the yen still weak across the board? Because then that's going to dictate whether or not I'm trading a higher probability pair and I have a higher probability entry. Somebody who's a little more aggressive trader might be interested in getting in a little bit sooner. Again, this is more aggressive, so there's more risk involved. And right above this long wick right there, that's about 87.10. Maybe set a price alarm there and check things out at that point for an earlier entry. If one would enter at that point, the next point of resistance would be about 38 pips away and then 64 pips away, and then after that point it would be relatively clear sailing up to about maybe 132 pips. Again, these are higher probability entries, and just because I say something's got clear sailing or it's got more potential, there's a likelihood that it can happen, but there are absolutely no guarantees in trading. Let's take a look at the Aussie USD charts and see what we have there. Okay, now in this situation, the Aussie USD has taken out after testing and almost testing again, maybe putting in kind of a double bottom, close to it anyway at that point, the upper channel here on the, took out the upper channel on the daily chart, has yet to take out the upper channel on the weekly. So again, we're in an open buy situation on the daily, we're in an open sell situation on the weekly, so not quite in sync. That being said, we had a nice pullback here, took out the lower channel, and bounced off the 200 period moving average and started to move out higher highs, higher lows. So in this situation, a price alarm on the 1 hour chart would be roughly at 73.82. Come take a look at things again. And you could also take a look a little sooner if you wanted to at 73.32, right? Because we've got this little resistance area right about in there at maybe about 73.35. If it takes out that level, and again, this would be a more aggressive trade, getting in a little bit earlier, so there's more risk involved. If one got in there and it moved up to the upper channel, that'd be about 50 pips. I like to look at 100 pips or more generally for my trades. Now, what I'm seeing here also that's interesting on the weekly chart, good angle and separation on slow stochastics, turning up from below 20 on the weekly, turning up from below 20 on the 4 hour with angle and separation, and it's already made a move to the upside, reflected here on the price chart, reflected here on slow stochastics, and we've got angle and separation as well there. We also have kind of a neutral position, although we're above 80 on the daily chart. Something else to keep in mind, that on both the daily and the weekly chart, price action is still below one of our main lines in the sand, if you will, which is the 200 period moving average. Price action is below the 200 period moving average on the daily, still below the 200 period moving average on the weekly. Although, again, because it's been making higher highs and higher lows, we see price action is above the 200 on the 1 hour and prices above the 200 on the 4 hour. So those type of things are all things that I take into consideration. And again, I wouldn't be getting into any of the trades, any of the charts that we've looked at right now. I'd be setting price alarms to come take a look again as the build out occurs, because again, we don't have the weekly and the daily in sync for our longer term trading strategy. When that happens, things can become a little more clear. Potentially we can trade larger size, always being concerned again that we're not over leveraging our account. Let's take a look at one other pair before we start to run out of time here. Euro Aussie currency pair, and this is a chart. Okay, took out the upper channel, took out the upper channel, and now took out the lower channel for the first time in a bit of time, going back here again till about April 29th, right in that area. So it's the first time that it's taken it out, and this is on the daily chart. So we're in an open sell on the daily. We're still in an open buy on the weekly, even though candle-wise, price action has been making lower highs, lower lows on the weekly. We still haven't taken out that lower Donchian channel, and that is my strategy of choice. So in my book, Donchian channel book, we're still receiving mixed signals, though not as mixed as they were last week. We'd be looking to go short the pair because the euro is weak, the Aussie is strong, and price action again took out the lower channel on the daily. So again, on the 4 hour, what I'm seeing here, angle and separation to the downside on slow stochastics. If you want to be a very aggressive trader, you could set a price alarm at about 1.5660, and then it's kind of clear sailing down from there, and that's for about 230 pips. And we said that was at about 50, roughly the price alarm at 5660, and this should be about 5660 right in there below that 200 period moving average. So you can see it's a little choppier ride on the way down on the 1 hour, a little smoother ride on the way down looking at the 4 hour, but again, angle and separation to the downside, angle and separation to the downside, angle and separation to the downside. Okay, we're getting close to our time limit here, so I just want to say to everyone, thanks for being here. And again, if you have any questions, rcrevofx@gmail.com. Thanks so much for being here. Bye now.